This is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show that we conduct every weekend with the help of technical charts and try to understand what happened in the market during the previous week and then plan for a better trade for the upcoming day. It's tomorrow, the week that's starting from tomorrow, January 8th, 2024. So if you're not subscribed, please subscribe and share to friends and colleagues, and so that it reaches out to all. Let's get into the charts. Here we have a weekly view where it's very visible that you have a trending market with multiple flag breakouts and a cup and handle where it all started. That's evident from both the indices, right side Banknifty as well. Right. This is another view. We have a parallel channel here, trend line channel, whatever you call it, and it's at the very top on both indices. Daily, this is what is happening. Vertical moves. That's breakouts after breakouts. It has been happening from November end. 20,000. It's very close to 22,000. 45,000. It's closer to 49,000. It's not even 45. It is 44. So it's 6,500 points. This is the candlestick view. On the left side you can see the Nifty. This is a weekly candle. A weekly is more powerful than a daily. Weekly candle is a doji. It's a small body. Every small bodies are indecisive. The wick size indicates the fight between the bulls and the bears. So that has happened after a kind of very solid wide range bullish candle the previous week. So there is a pause, definitely pause, but you don't have to be afraid of the pause because we had another pause previous week, and look at that breakout that happened. Right side Nifty Banknifty, you have a similar small body, indecisive doji, and it's also an inside bar, which means consolidation is what is very much evident from the price action and the candlestick as well. So overall, weekly is small body indecisive doji. Doji at the top of a rally is not that great. It could indicate an indecision and a potential bearishness if it is confirmed that the price moves below the doji's candle low. Only then you need to worry about. So you know where it is, right? This is a daily view. If you look at the last week, the 4 5 days, we can see that it is a new all-time high that got hit. That's how the Nifty began, and then a V-shaped move, a down dip, but it's 1.5 within that range percentage, and then a recovery, complete recovery almost. So it's a V-shaped recovery move is what happened. Nifty on the left side, Banknifty on the right side. Bollinger Bands, it helps to understand the volatility and the market price movement as well. So here left side you have the Nifty, which does not show much of contraction. It's expansion that has actually been seen, and that expansion of the bands on either side indicates that the market is setting itself ready for another up move, further up move. But on the contrary, right side Banknifty, if you see, it's absolute contraction of the bands that you see, which means market is going to move up and down within these bands. Right? The price is within that zone. So there is a divergence in the interpretation of the Bollinger Bands on both indices. Right? Nifty is giving no indications of consolidation from the band's point of view, and it indicates that it is ready to move further. So that's something we have to keep in mind. So before going to the Nifty support and resistances, let's get back to a summary of it. So it's a flat negative close on the Nifty. That's 21 points lost, and it's again a flat 129 points, 0.27 flat negative close on the Banknifty also. More doji, we have seen that indecisiveness, and we know that it's a rally of 3,000 and 6,500 that we are talking about with respect to the Nifty and the Banknifty. That's a kind of rally, 30% and 26% from the last swing low, last to last, the major swing lows. The last swing itself, 16% is a kind of move that has happened. So it is no doubt that it is a trending up, vertical up move rally that is going on. And daily candles, we have seen again there is a flat close on the Nifty with 52 points, but it closed green. But in the Banknifty, it's a small body. It looks more like a hammer than a doji. Doji needs little more smaller body. But indecisiveness is evident on the daily charts, short term as well as weekly charts, medium term. Both indecisiveness is very much evident from the candlestick point of view. Bollinger Bands, we already seen that there is divergence between the indices. Where one Nifty is moving up, is expected to move up, while Banknifty is expected to move sideways. So we had a week of very small correction which got bought into, and then quick reversal, V-shaped reversal that happened. So, but finally the close is very important. Close has turned out to be very indecisive. Right? After the recovery has happened. Okay, recovery happened in 4-5 days, fine, but now what? That is the indecisive, what we can make out. Now let's look at the support and resistance levels. These boxes are consolidation zones, and then right now in Nifty it shows that it's a consolidation. So first resistance on the upside will be 21,834, which is the all-time high. After that 21,900 and 22,000, all big rounding numbers. That's the levels that we can look for the next week. Probably it may manage to go above that also if this breakout happens, but the first resistances will be the all-time highs, which is very close, hardly 300 points or less than that. Hardly 100 points, 150 points max. So downside, the first support will come in as a gap that is at 21,477, 21,477. Which is very close to a 21,335, which is a 20 exponential moving average. So that zone, then you have the rounding number brought right below at 21,000, which is also a Fibonacci extension of 23.6 and a Fibonacci extension of 61.8 and Fibonacci retracement from the top 23.6. So between 21,000 and so 21,000 is a major confluence of this Fibonacci's, and then that's a previous swing low also very close by, and so that's 21,000, 21,350, 21,470. So that's the supports that we can see for the next week, and if that does not hold, it can go down to the 50 exponential moving average, which is in confluence with the gap support, and also the next level of Fibonacci extension and retracement at 58 and 38 respectively. So that's the levels. Banknifty, again you can see that boxes which indicate some kind of consolidations, and the first resistance would be the 48,630, that's the all-time high level, and after that 48,700, 800, 900, likewise till 49,000 will be resistance. Also, to understand, this is the top of a trendline channel on both the indices, and also Fibonacci extension completion, like so unknown territories upside. You can't project beyond that. Never know what happens. But at the very top, after making all-time high, there is a retracement that has happened now, and similarly Banknifty also, after hitting the very top of the trendline channel, a retracement and a complete recovery has happened. Downside to the Banknifty, the supports will be 47,750, which is very close to the 47,500, which is a 20 exponential moving average, And then you have the 47, actually its Fibonacci extension said 47,750, right? The another red 47,500 is the 23.6 retracement and a 61 point Fibonacci extension levels, right? So 47,750, 47,500, then rounding number, and then there is 47,200 also can have support, 46,800. The first major support after the 47,500 is actually 46,500. Then 46,000 is also a major rounding number, and Fibonacci extension and Fibonacci retracement confluence. So that's the support resistance levels of the Banknifty. Looking at the momentum and the trend, we basically use the momentum RSI indicator, and for trend we use the ADX. So we do a multi-time frame analysis of looking at the weekly and daily. Left side we have the Nifty weekly and the Banknifty weekly. Upside, no. On the left side you have the weekly, right side you have the Bank daily. So here Nifty we can, so what is that? It's upside bullish, and it's bullish momentum and bullish trend. So we summarized, it's in the short term it's bullish rising in Nifty and bullish falling in Banknifty with respect to momentum. In the medium term it's bullish again but falling on Nifty, bullish again but falling on the Banknifty. Trend ADX, it's bullish short term and medium term, no doubt about that, but it's bullish and slightly falling in the daily on the Nifty, bullish and falling again. The strength falling in the sense the strength of the trend is falling in the case of Banknifty short term, but in the weekly it's bullish and rising with more trend strength in the case of Nifty and the Banknifty on the medium term. So that's about momentum and trend indicators. The next parameter that we are trying to understand is the volatility and the open interest. Volatility is kind of one way understood with the help of Bollinger Bands. Already done that. Another way is to look at the India VIX. India VIX has cooled off 13%. We had been talking about market being at the very top, and the VIX has not cooled off. But now, the previous week, for the first time, such a big cool off has happened, 13%, which gives big hope for the bulls. VIX has really cooled off from 16, it has come to 13, so it has come to 12.6. That's it. And it's almost 13% of cool off has happened last week, and it maintains a low volatility. The implied volatility versus the realized volatility spread difference is very close to the 30 to 50 range, the mid range, which is kind of positive again for the option sellers, rather than, although it's a trending market, it's come somewhere a little bit favorable for the sellers. Now open interest data is the next analysis. There if you see the futures open interest is indicating a long build-up on the Nifty, and the Banknifty is showing a long unwinding, which is basically slightly bearish in nature. The people who have gone long have covered and then gone short, are covering up their longs. So that way there is a divergence in Nifty and Banknifty here also. So that's about open interest on the futures. Now with the open interest on the options for the next weekly expiry that's coming on January 10th and 11th on Nifty and Banknifty and Nifty respectively, showing that the put call ratio is not that great. It's 0.88 and 0.74 in the indices, Nifty and the Banknifty respectively, which is not bullish enough, neither it is bearish. Right. So that's it. A cool off in the VIX, contradicting futures OI between bullish Nifty and bearish Banknifty, and not so bullish put call ratio for the options open interest. So these are the levels if you're trying to understand the options for the next weekly expiry. Clear resistance and range. But what is interesting here is that we have a wider range for the highest put and call rating. See, the highest put rating is seen at 21,000. Remember, we are at 21,800. That's very far away. Now the highest resistance is at 22,500. That's a very wide range. right? Very, very wide range. So the option writers are seeing that such a wide range of volatile movements is what is expected as of now for the next week. Don't know why. That's how the bet has been placed by the big players, the option sellers. Call rating, highest call rating is 22,500. That means, you understand, I hope. Second highest is at 21,500. Second highest put. Second highest call is at 23,000. Can you imagine? So option traders have no clues either. All they know it's going to be heavily volatile next week. That's how it indicates. Banknifty is also very wide range. 46,000 is where the highest put rating is there, and 50,000 is where the highest call rating is. Something is definitely wrong either in the data or they have no clues. Because can you imagine that weekly expiry, which is hardly 4 or 5 days ahead, is having a 4,000 point difference in the Banknifty with respect to the options. It's going to expire in a few days. Right, so that is indicating something that you have to be clearly, make a note of this point. Right? That's how it is. A wide range, very wide range is what people are placing bets on the puts and the calls for the next weekly expiry. Having seen that, we are going to look at how the different industrial sectors that contribute maximum to the index. Now the IT sector was down, metal was down, auto was down. These are the three sectors which drove the market down last week and made it an indecisive dodgy. But three other sectors really did well. Pharma did very well, 3% up. FMCG did well, 1% up. Realty did extremely well with 8% up. So if you look at the IT sector is where we will have to wait, because that's a sector where the index momentum on the weekly has slipped down into the sideways. Not on the weekly, daily. Weekly or the medium term bullishness is still there, but short term bullishness has dropped to the side. So you have to stay away from taking long positions on that. Otherwise, all other sectors are continuing in the bullish zones with respect to the momentum on both the time frames. So that way, if you look at it, it's very positive that bulls can expect more up move, because across the sector except the IT temporarily slipped to short term. Across the sector up move is there. Right? Participation of different sectors. People are placing money in across the sectors. People are bullish. Look at those indices charts here. Nifty IT is showing that it has taken out a major gap resistance, and then it broke out of that and retracing a little bit. There is solid. Probably it may take a support at the previous breakout zone, and SCIP change in polarity bounds can happen from here. Nifty metal down here is also has a lot of space more, although it's at all-time high, to go to the top of the channel. Absolute bullish momentum and the trend with respect to RSI and the ADX indicators. Coming to what is this sector? Auto index. Also is, I think this chart is turned ulta. So we would quickly go to that sector directly and look at what is happening. Yeah, it's a parallel channel, and it's at the very top of the channel. That channel is very, very long, very old one, extremely strong. So there is some resistance that is seen there and is expected because it's the top of the channel. Otherwise, momentum is absolute bullish, trend is absolute bullish at the all-time highs. Now moving on, the pharma sector, which did 3% up move, is also at all-time high, breaking out of a weekly flag pattern, momentum bullish on weekly, trend bullish on weekly. FMCG is also on the top of a channel. It looks like it is trying to break out, because FMCG also did well last week, momentum and the trend are bullish. Reality also 8%, this seems like it is heading out of the channel and at all-time highs with bullish momentum and trend. The next Parameter that we analyze to understand the market better is the index heavyweights, the heavyweight stocks that contribute maximum to the index Nifty 50. So HDFC Bank, which is the highest contributor, almost 15% or something, seems to be having some kind of resistance at the very top, where it was inches away from hitting the all-time high and breaking out of this consolidation zone. This gives a doubt that is it the story going to repeat, and are we going to have another downfall, or are we going to consolidate here for some time before it takes out that levels and make all-time highs with power. We don't know what the market has in mind, but momentum is bullish, trend is bullish on the weekly charts, which gives hope. And volumes also, selling volume is less than the simple moving average. So bulls can still hope for some consolidation to break out from here, but two candles at least, if it consistently showing red here, means we may have problems with lower low. So HDFC still maintaining the bullish momentum, so no problems. Lions still maintaining the bullish and rising. It has confirmed the breakout from the all-time highs from the consolidation zone. Volumes are there, momentum is there, trend is there, all bullish. No problems there. ICICI Bank, the next big one, also seems to maintain the bullish momentum. No, actually it slipped in the sideways and is not able to rise it back to the RSI above 60. But it's in a parallel channel. A lot of space both sides. We'll have to see where it is going to take support and then consolidate or move. We'll have to keep watch. But as of now, small trouble in the ICICI. We'll have to keep close watch if it is going to gain back the momentum and if it is going to climb in the bullish momentum or not. Next heavyweight is Infosys. Down here we have TCS. Right. Infosys have a big trouble there, right on the top at 1750 zone, where there is a gap resistance. Infosys showing some retracement pullback after it successfully took out that parallel channel breakout, or it retracing and then doing a change in priority bounce, where the previous breakout zone can appear as a consolidation support, and then from there it will go. But momentum is bullish, which is good. Trend is good, bullish. Look at the TCS IT stock, another heavyweight stock. Momentum is taken a range shift of momentum, which is powerful. If it works out, if there is a bounce happening from here, RSI 60 on the momentum, then it's going to be really good. TCS also had broken out, confirmed the breakout from the parallel channel, but a retracement is coming. Probably it may be trying to consolidate at the change in priority bounce opportunity that is there. From here it can really move up, but the advantage here is that TCS does not have the resistance that the INFI has got. The gap resistance is not there. It's already confirmed about breakout. Kotak Bank, the next one on the top, has a solid bearish candle, but Kotak has been moving up and down within that range for a very long time. It's a contrast stock. Momentum has actually slipped in the sideways on the weekly. So we have some trouble with ICICI and Kotak Bank only among these 7 highest contributing stocks. Because ITC also is absolute bullish with momentum and trend, and it's also a flag breakout confirmation from the ITC. Long way to go. So at least the size of the head of the flag can be the kind of movement that can another 20-30 points can move up, at least to the new all-time highs for sure. Probably it will make a rounding pattern there, and that from where another mega breakout can happen. These are good, volumes are good, decent volumes are there, and momentum and trend also is good. So all the heavyweight stocks except some consolidation, sideways movement in the ICICI Bank and the Kotak Bank. Otherwise, things are looking good with respect to the parameter of the heavyweight stocks. Now we try to understand how the institutions are participating. Especially the foreign institutions have been buying nearly 2,000 crores in the cash last week, while domestic institutions were the culprits who were selling nearly 7,300 crores. That's of course the profit booking that they're doing for sure. That is what pulled down, made the market not to have broken out earlier. But if that is not there and FIs continue to pump in money, imagine where the markets can go. So overall, the FIs are medium bullish on the index futures. In options, they are medium bearish. The pro traders or property desk kind of FIs only, they are also slightly bearish on futures and options both. Now client, which means the brokers or retailers, you can say, they are strongly bullish on the options and medium bearish on the futures. Probably some kind of confusion, but FIs are heavily bullish, right? Retail is bullish, so that way market should be strong and heading up. Net derivatives on the FIs moved up actually last week. That's right. So institutions, as long as FIs are participating, domestic institutions are booking profit and selling, it's okay. But if foreign money is coming in, then market will move up. It's a common logic. Global markets is the next parameter that you're trying to understand. Not just the global markets, global commodities and currency pairs. We start with the currency pair. Dollar index moved 1% up. Imagine, remember, we had a breach of the neckline of the upper handle, and it seems to have taken a support and then made real 1% climb back. But it is still below the neckline, right? But a big reversal in the bearish momentum has climbed into sideways, so it's no longer bearish. Dollar was falling, which we thought may be very good for Indian economy, but dollar is once again spiking up, which gives some worry, especially since it has climbed back to this sideways now. But the USD INR currency pair actually has not benefited much of the dollar spike last week. In fact, it has cooled down for 1.12, slightly flattish close at 83, still at the weakest levels since years now. Remember, we have a ascending wedge, and we are hoping for a breakout from here, breakdown from here since ages. Nothing is happening. Maybe a central bank intervention comes in and it never allows the price to go beyond 83, 84, although there is a scope chartically to go towards the 84, 85. But it has been consolidating, as you can see the weekly charts since most 10, 15 weeks. It has been doing nothing but zigzagging in that ascending wedge. So that's about a week rupee and a falling and recovering dollar index. Now, crude oil has been falling. It has in fact fallen 29% from the top after hitting 94. Seems to have taken some support in the median of the channel and is spiking up. It had fallen to the bear zones. Still a trend is bearishly, but it has climbed back to the sideways. So that is not great news, but it's okay as long as it's below 74, 75. If it is spiking towards 93 once again, we may have trouble, but as of now seems okay. This probably may be linked to some shipping conflict that is there globally. The gold had made an all-time high, if you remember, 3 or 4 weeks back, and then after that profit booking came in, sell-off came in, but gold is not ready to fall further down. It climbed back to the momentum of weekly bullish zones, but again slipped back into sideways. Some selling pressure is coming in once again at the very top. The thing is, it is not ready to fall down. It is hanging on there and consolidating at the top is what is happening. Gold had less than 1% down move this week. Remember, it was 18% up move it had done earlier before hitting new all-time high. So now we look at the global markets, especially the US market, the mother market. It's red. Dow Jones is less than 1%, 0.60% down. S&P 500 is 3% down. And Nasdaq is 1.6%. So overall, red that's seen in the global markets. But Momentum is still bullish. It does not slip in the sideways, or it's not falling. So it's bullish still. But if it is, remember that US markets had, before to show the chart. So this is Dow Jones. US markets had rallied substantially, similar to how we had moved and made all-time highs, and then some sell-off, some retracement, some corrections. What is happening? But look at the momentum otherwise above RSI 60. Same with Nasdaq and it's S&P 500 that did not make the new all-time high. Nasdaq did make that, and some see the sell-off has happened, some pullback, profit booking. Momentum is intact. So you need to watch out if that momentum is slipping again to the sideways of the so is all that we need to worry it. Otherwise, it's just normal sell-off, profit booking. Now that analysis have come to a conclusion, we will have two stock picks, actionable for the next week. One is INDECISIVE, oil and natural gas. It's a cup pattern breakout that has happened multiple weeks back. Good volume consolidation breakout again happened, and then still there is space towards the top of the ascending wedge. Tight stop losses with this previous week will handle slow. This can be a swing trading opportunities that makes into 1 or 2 weeks. The second stock is Brokerage Consumer, which is solid patterns formed everywhere. Volumes are good, trend is good, momentum is good, extreme bullish momentum and trend. It seems like it has broken out from a cup pattern or a rounding pattern after being in a parallel channel for quite some time. A good solid breakout in the last 3 weeks. Very good. From 1000 it has reached 1200 point breakout. And slightly cautious because such particular move happened, but chartically with tight stop losses, swing trade opportunities at 1 or 2 weeks can be tried. It can be rewarding if this rally does not stop. Probably it may consolidate here, no, but have tight stop loss, tight stop loss, right? It's extremely bullish, but normally it's not advisable to enter when it is extremely bullish. We'll have to wait for some consolidation. That's it. Time. I'm hoping that some consolidation will happen and that will give an opportunity for an entry, but have tight stop losses. That's Brokerage Consumer Product. FMCG was rallying last week. Oil and natural gas, I'm not sure why it is rallying, but yeah, it's also showing that it's an opportunity. Volumes are good, momentum trend is also good. Another actionable on the index play. This is the payoff chart of Nifty weekly options, where basically we are inside hedging, put and call OTMs, and then doing put and call for OTMs sell, and then an outside hedge buy for OTM. So the selling will be twice that of the buying of the both hedges. So 2 are sold here means 1 is sold here and 1 is sold at the outside hedge. 1 is bought in the outside hedge and 1 is bought in the inside hedge, and 2 are sold on the so that's a proportion. So basically this is known as a Batman strategy. This will give very less profit if the market is range bound and not doing much action. But if there is a spike that is expected to happen either of the side, it can be really rewarding. But if the spike is too big, then we have a problem. You may have to either cut out the position, get out with the profit or loss, whatever, and or we can roll up the entire leg. That means this 2 buy options and 1 sell options. You'll have to roll down or roll up. Either side market moves and do the adjustments. Right? The probability of profit is good. Risk reward is fairly okay as long as you don't stick to the last day of expand. Get out before Wednesday at 1 to 2% maximum targeting for that. Beauty is that it gives break evens with a wider range. So 21,200 and 22,100 is the range that we know that the market is most likely to stay. So position size, increase your capital size. Increase your position size as per your risk appetite and capital size again. But the margin requirements are very less because it's completely hedged with 2 outside hedging and inside hedging. So you have to increase the capital size, number of lots to gain, because as long as it stays within this middle range, there is less profit. But play it safe. It's completely hedged. You know what you lose exactly. max loss, max profit, everything is there. So that's the Nifty options weekly strategy. Now that we have seen all of that, let's just conclude. Last week was volatile, V-shape recovery, very small dip and very quick recovery. And in between, Nifty made an all-time high, new all-time high also. So the market is heading higher and higher each day, not ready to go down at all. No major corrections is coming, and we are in the middle of 30% rally. Anything could happen. The momentum of the index, the trend, all this remain bullish. FIs are buying since several weeks now. VIX has really called off 15% this week, and it maintains a low volatility regime. Nifty Bollinger Bands are indicating its expansion is not ready to even contract. We are at all-time highs. These are the factors that give the bulls hope that there's going to be even bigger rally ahead. But the US markets are showing some retracement red on the top. Put coverage is not that bullish enough. Both the indices, the daily chart show price is at the very top of trendline channel. Fibonacci extension also is complete, 78 and above. Bollinger Bands and Banknifty showing absolute contraction. Banknifty seems to be slightly weaker. All this gives hopes for the bears that they can expect for a retracement, a more powerful one of extending to 5% or beyond could come in any time from the trend. That's what the bears may be thinking. But otherwise, the market began with a new all-time high, then took a dip and then quickly recovered, not ready to correct at all. So basically, market is consolidating, but consolidating with a bullish bias, consolidating for another breakout is what you can understand. But the vertical breakouts, the entire December we had 3 breakouts. Now again another one in January probably going to happen. So this vertical move has not seen the required correction that is due. Is the only worry that you have to be cautious about. Otherwise things are fine. It goes to very big rounding number also, 22k. See, if that is taken out, for markets may move little more and then decide to do that correction, or it may do it now itself. You never know when it will do that. So technically, chartically, it's absolute bullish, but considering all the different factors, my view is mild bearish to neutral. That's my view for the next week. I expect that some corrections could come in, even if the market may move up within the week itself. That correction that's due may come in is what I may go wrong. That's okay. You can have a different view. Considering all this analysis that we did, your view can be totally different. This is my view. Now there are recession fears, inflation, interest rate, war, COVID, all these things are there. So black swans could come in. So always protect your capital. Play it safe. Hedge positions and options must. Cut short position size if the VIX is spiking about 20. Now 20,500 and 22,000 is the level that you can look for the next week. 46,000 and 49,000 is the range of the Banknifty. So as long as 21,000 and this 47,000 is maintained, we can hope that this is consolidating and then getting ready for further up. So that's all I have for the next week. If you're not subscribed, subscribe and share with friends and colleagues. I also have channels, the channels, social media channels for regular every day, within the day, charts are posted. So don't forget to subscribe to this Twitter where regular postings are there. And we have daily. This is a weekly market analysis. We have every day around 7 to 8 we will have a market. Daily market analysis will give you a view for the next. So thanks for watching. Subscribe and share to friends. Happy trading, happy learning, happy investing. Bye bye.